Splendid evening it is to viewers. Welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from our Hampton studios. I'm Ibn Mabunda. Let's get started. The 92-day Treasury bills, which were on offer between the 25th and 26th of September, were oversubscribed, with total bids coming in at 419 million Zimbabwean dollars against an offer of just $100 million. However, the amount allotted was just $102 million in that regard. Star Africa bemoans the impact of power outages on its production volumes. In a trading update for the period under review, the group highlighted that although overall volumes were ahead of the comparative period last year to June of 2019, the loss of sales experienced in July and part of August 2019 due to the power outages reversed the headway made and reduced the period's performance to 90% over the comparative period last year. Our Equity Access team attended the annual general meeting. Let's have a look. During the presentation, you did allude to the fact that there's been a decline in terms of your sales volumes. Would you want to explain to that what has been the major driver of that, as well as what measures you're taking to keep everything in check?
As explained, the decline was due really to the power shortages that we had in July and August, and but otherwise demand was good, demand was strong. We've ramped up production after our arrangement with ZESA, and we are producing well above our budgets to catch up on the volumes that we lost.
Interesting. And of course, with an economy that's running in this particular manner, let's talk about your exports. Do you want to shed light in terms of the volumes as well as the tonnage that you've been able to export, as well as perhaps what we can look forward going into the future?
We've been working very hard on exports. As you know, it takes time to set up these markets. We've been to DRC, we've been to Zambia, South Africa, and we are getting orders there. We've started exporting into those countries. It's still early days, but we've now, in the last 1 month, we've exported about 700 tons outside the country.
Interesting. Now, let's talk about your the value in terms of your shareholders. From time to time, we've seen a mix of debt to equity, which seems to be on the side of depleting or eroding the value of the shareholders. We want to shed light where that particular initiative is concerned, as well as the balance sheet restructuring that you did allude to during the presentation.
Yes, the scheme of arrangement and the balance sheet restructuring has been very successful in my view. We had about 70% of creditors converting into shares, and so that resulted in value being kept in the company, and we've continued servicing the debts. We've continued with very good interest rates that are below market. So I think shareholders have benefited from the balance sheet restructuring so far.
The reporting galore continues as we come to the close of September. National Building Society reporting a growth in its loan book by 16% in the half year to 2019. This comes despite macroeconomic setup. The society's loan and advances grew to 95 million Zimbabwean dollars compared to 81.6 million dollars in the previous comparative period. The society's total operating income for the period under review scaled 363% to 23.7 million Zimbabwean dollars against $5.1 million the previous year. Revenue earned in the period under review is ahead by 62% of the same period against last year's performance. As we make progress, National Foods reports a 13% increase in volumes in the half year to 30 June 2019. The profitability of all divisions exceeded inflation with the exception of MCG as well as pure oil. Of note is the fact that the revenue increased by 90% to $566 million against $298 in the previous year. The group is set to launch its housing a mistake there. Dawn Properties Limited is said to have seen an increase in its occupancy over the 6 months period to 30 June 2019. Of note is the fact that this was against how they performed in the previous comparative period. Revenue for the period closed at $6.4 million, which was an increase of 10% compared to $3.1 million in the same period last year. Revenues from hotel occupancy came in at $4.7 million against $1.6 million in the same period of 2018. Now, the group will launch its second housing project under Marlborough Sunset Views in the second half of the year. The project consists of 354 residential stands measuring 2,000 square meters. Now, during the course of next week, we will make time to crunch the teensy-weensys of the particular performance of these specific companies. Now, to get into the details of the companies that we did report on yesterday, we will get into a graphical presentation of how these companies have fared in that particular order. Now, this would be how Rainbow Tourism Group has fared over the past few years, and as far as the half-year performances are concerned, the profit after tax right at the top there would their revenue, right at the top there would reveal $11.75 million in the half year of 2016, 11.65 in half year of 2017, 13.68 in half year of 2018, significantly jumping there to $37.01 million. But of course, it would be important to note that there is currency adjustment there, as well as the effects of inflation coming into the particular matrix. As well, you can check their profit after tax position, which has moved, of course, from 2016, where they were in the red, back into the black right up until 2018. Right now, here at 2019, they report a profit position of 5.42 million Zimbabwean dollars. Now, while of course there would be issues like inflation coming in there, but it would also be important to note that they have revenues in US dollar terms that came in at just about $5 million in this particular period in question. Now, as we make progress to get into other, this is of course their full year performance, which pretty much dipped between 2014, dipping right up until 2016, and then we see that jump there right up until 2018. Of course, they have been able to navigate and restructure their debt to get them into this particular position that we're seeing indicated in that particular graph. Now, this is Panenga. This is how they have fared over the past few years. With Panenga, you would be, of course, aware of the fact that there is an acquisition at hand in Dalaglio in an investment worth just about 20 million United States dollars. And now, to get into their profit position, you can see there is a discernible trend moving from the full year of 2014 right up until 2018. In 2016, a profit after tax position of $8.4 million. In 2017, 12.9 million US dollars right up until 2018, where they reported $12.7 million. Their revenue position in 2018 came in at $42.5 million. Now, this concludes our evening news bulletin. Up next is a look at the news in News Review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe. stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success.